Okay, Pat. So when we left the first half of class, we asked students whether we should start this business or not. And you know what? I've been thinking about that. And I just have a really, really hard time coming up with a solid answer. Now, I was thinking if we can have better cash, I think that would make it a lot easier for me to make the decision. So Pat, is there a way that we could improve our cash situation?
Well, I bet there is, Simon. I'm sure we can look at some ideas and see if we can't move things in the right direction. What do you think is the most common idea that entrepreneurs come up with when they're trying to grow?
Yeah, great question. So the first thing that I thought of, because I used to be a sales guy, is let's increase sales. And so I think that might do it. We just need to speed up our sales quicker.
Okay, well, let's look at our spreadsheet and see what would happen if we were able to increase our sales.
All right, let me share the spreadsheet.
We'll just grow ourselves out of the problem.
Here is the spreadsheet that we use in the first half of class. What I'm going to do now is set this spreadsheet up so that we can use it for this lecture. The first thing that I'm going to do is just to show you that this is the spreadsheet. Here's the income statement. Here's the cash flow statement, the checkbook, and then down at the bottom is the inventory. Okay, so this should look very familiar to everyone. Okay, so the first thing that I'm going to do is I am going to split this screen into two parts. So I can go here and click split. And what that does is that allows us to basically view the same spreadsheet, but two sections at the same time. So very, very nice feature. The second thing that I'm going to do is I am going to turn calculation onto manual so that all the numbers don't change so fast, but I can actually control when I want the numbers to change. It's called manual calculation. And then the last thing I'm going to do is I'm going to hide the commands. So I'm going to auto hide the ribbon. And here we are. This is the spreadsheet that we will be using for the second half of class.
Simon has the income statement and the cash flow statement up on the screen, and he has split the screen so that we can see what's going on in both statements simultaneously. So Simon, why don't you just scroll down the income statement so everyone can see what we're doing here. There we've got the net profit, and now we go on down to the checkbook and just scroll on down, and we've got our ending cash balance and our inventory down there. And our spreadsheets are all interconnected, and they're set on manual calculate. So when we change a number, we'll be able to pull up the profit and the cash flow, ending balance, and see what's going on as the numbers calculate. So if we're going to look at growing our sales, our ad man Eon thinks that if he just kind of repositions some of the advertising without increasing the advertising budget, that he might be able to help us increase our unit shipped to 15,000 in month 4. $20,000 in month 5, and 31,000 in month 6.
And you said we can do all of this without increasing our marketing expense?
Without increasing our marketing expense. So that sounds like quite a deal.
Let's do it.
All right. So let's pull up our ending net profit and our cash balance. And let's hit calculate and see what that does. Is that going to help us grow out of this problem? Whoops.
Whoa, look at this profit. Pat, we made a ton of money.
Profit's looking great. We're off the charts in profit, but look at the cash, Simon.
What in the world? What's going on there, Pat?
Well, let's look at our growth consumes cash slide, Simon, and see if we can explain what's happening.
Okay, let me share that.
All right, so especially for startup companies, Simon, but this even happens to bigger companies. When you're starting out and your sales are growing fast, your profitability is usually growing at a similar but not quite as steep incline. It's normal for cash to go down. And we say not only does growth consumes cash, but rapid growth consumes cash rapidly. And that's clearly what happened to Intercity right here. He just grew too fast in that scenario, and the cash just went way down in the hole. So it's clear that we can't afford all that growth. And that's just counterintuitive to entrepreneurs because they don't want to turn down sales.
I would have never thought about this as a salesperson.
Yeah, it's just a tough position to be in. You just have to control that growth in the early stages so you don't find yourself in this very situation. So clearly that didn't work. So that took us, if we go back to our spreadsheet, with this growth scenario, we had $40,140 maximum deficit. Add that to the $8,000 the entrepreneur already put in. That means with this new scenario, we need $48,140 plus a cushion to get this business started. And clearly we can't afford that.
I don't like that at all, Pat.
I'm sure there's something else we can do though. So let's go back to our original example and see if we can come up with some more fruitful ideas. Okay, so our original example had $10,000 in sales in month 4, sorry, 10,000, 14,000 in month 5, and 20,000 in month 6. So if we hit calculate, that should take us right back to our original numbers. That profit looks really good. It's hard to give that up, but we just can't afford it right now. All right, so what can we do that's going to help and not put us in a worse problem? What about if we could talk half of our customers into paying us in the month they get the goods? Now, we're selling through distributors. They're all very excited about this Intercity widget. They think our entrepreneur is the real deal and that he's in it for the long haul. And maybe we could get half of them to pay us in the month that they receive the goods. So why don't we look at our cash flow statement, because it's not going to change anything on the income statement. Our sales are still the same. We're just looking at the cash flow and how fast we get the money. So in our receipts from sales, we have the common stock line there. That's a blank line, and we're going to use that as a little scribble sheet. So sales, total revenue, which is $3,000, and put that, and then the other half, that's right in month 3, and half of our 14,000 from month 3, which is 7,000, and the other half in month 4, and half of our month 4 sales, which is 10,000, and the other half there. In month 5, 14,000 would be half, and the other half in month 6, and 20,000 half of what we sell that month. So we're getting half of our customers to pay us in the month that they receive the goods. Is that doable? What do you think? We might be able to pull that off.
Yeah, Pat, that's actually very interesting. So I'm looking forward to see how this impacts our cash situation.
All right, so let's pull that net profit into view. And let's pull up our ending cash balance. And let's hit calculate.
Whoa.
Well, that did some good for us.
It sure did.
That was a big help. Our maximum deficit is in month number 4, and it's $14,540. And add that to the $8,000 that our entrepreneur put in to begin with. And now what we need is $22,540 plus a little cushion. So that definitely moved us in the right direction.
So I think I kind of get the game here, Pat, which is to continue to adjust our financial projection assumptions to try to reduce our startup cash. So I bet you there's other things that we can still do.
I'll bet there is. You know, I noticed that maximum deficit is in month 4, and our advertising man, Eon, starts to give us terms of net 30 days in month 5. So if we look at advertising, what if we could talk him into giving us terms of net 30 days 1 month sooner? We've been a good customer. We've paid on time. Sales are growing. And as our sales grow, we're increasing our advertising budget. So maybe we could talk him into giving us terms of net 30 days in month 4. So in that case, we would just move that $1,400 over to month 5.
Okay. There we go.
We've already got our net profit in view, so let's pull up our ending cash balance.
Here we go.
And hit calculate. All right. So our maximum deficit is in month number 5, and it's $14,340. Now that didn't change things dramatically, but it helped. And in these early days, a few dollars might mean the difference between being able to make payroll on Friday or not. So every dollar counts. So we'll keep it. That was not a huge change, but it moved us in the right direction. So that's good. And let's keep scheming. What else?
All right. Let's see. What else can we do?
What about that rent expense?
Ah, yes. In our financial projections, we assume that we basically paid the rent, first month's rent. I wonder, Pat, if we can get the first month's free.
I bet we might be able to do that. You know, if you drive around town here lately, there's an awful lot of commercial space that's vacant. And I'll bet there is a landlord somewhere who would give us at least a month's free rent for that kind of off the main road warehouse and office space that inner city needs. So what about 2 months? You think we could talk them into 2 months?
I feel pretty good about 2 months as well. You know, basically you can have, you can sign a 2-year lease, right? Because a lot of places will give you the first month free for the first year. So why not give us 2 months free if we sign 2 years lease, right? I think we can find people who go for that.
I think we could, and maybe we could push it and go to 3 months.
Whoa, okay.
Well, you know what happens to vacant commercial property, Simon? It starts looking shabby really fast. And landlords like to have their spaces occupied because otherwise grass starts growing up through the cracks in the pavement. The windows haven't been washed. There are placards pasted all over the place, and it just starts looking really seedy. So landlord might let us have 3 months free rent. Maybe we increase the rent later on, or we have a longer lease, as you said. Maybe we go 3 years. But I'll bet we could do that, especially in the times we're going through right now. So if we do 0 in month 3, and then let's pull up our net profit.
Well, let me go ahead and set the spreadsheet on the cash flow to match the income statement. So down here on the cash flow, I need to make sure that our rent is the same as the income statement.
Yep.
And so let me go ahead and do that first. There we go.
All right. So let's pull up that net profit. And let's pull up our cash flow ending balance.
Okay.
And let's hit calculate.
Calculate.
Oh.
Oh, yeah.
Profitability went up because we're not paying the rent.
Yes.
And look at that cash balance.
Ooh, I like that.
Definitely going in the right direction. So our maximum deficit is now in month 5, and it's $11,940. So if we take that $11,940 and add it to the $8,000 the entrepreneur put in to start, that means we're now down to $19,940 plus a cushion to start this business. So I'm excited now, Simon. Let's see if we can come up with something else.
Okay, let's see what else we can do. Ta-da. Well, you know, Pat, I noticed that we bought equipment. What do you say instead of buying equipment, we lease the equipment? And do you think that'll help us save some cash?
Well, it sure might. You know, entrepreneurs get awfully clever with that equipment, and especially a company like Intercity where customers are not coming to your place of business. You know, you could be operating off an apple crate and nobody would know the difference. So,
that's right.
You know, if we get some not so great leased office equipment that maybe has been used before or something, nobody's going to know the difference. So I found a lease place, Simon, that would lease us some equipment for $45 per thousand per month. So in the first month, we bought $6,000 worth of equipment. So that formula then would be.
Well, let me go ahead and change it in the income statement from depreciation
it's going to be
to lease
expense
to expense. And then what was that formula again, Pat? Assuming we're leasing instead of buying.
Right. 6,000 or $45 times 6,000
divided by 1,000, and we have 270. So that's our expense cost.
Yes.
I mean, our lease expense. Yep.
For months 1 and 2.
For months 1 and 2. So Pat, what is the formula for this additional purchase?
All right. So we still have the 6,000. So $45 times 6,000 divided by 1,000. Plus $45 times 1,200 divided by 1,000.
Okay.
All right. So that continues all the way through month 6.
All right. Very good.
Okay.
Now we have to go down to the cash flow statement and change where we bought the office equipment.
Yes, to lease payment.
Lease payment. And we basically set it to the cell up at the top.
Right.
Here we go. So this is for the first purchase. And then this is for the second purchase.
Right.
There we go, Pat.
Okay, so let's pull that net profit into view. And let's pull the ending cash balance into view. And let's hit calculate.
Calculate. Whoa.
Whoa. That is doing some good, Simon.
We like that one. That looks really good.
So now we've got $6,252 as our maximum deficit, plus the $8,000 our entrepreneur put in. That means we're down to $14,252 plus a cushion to start this business. So I'm really pumped now. We're having some great ideas here and some good luck. So let's continue and see what else we can do.
Yeah, what else can we do? Let's take a look.
What about that entrepreneur's salary?
Oh, yeah, right here.
Yeah, you know, it's normal for entrepreneurs to do without a salary like our entrepreneur did in month one, but a lot of entrepreneurs go without a salary for 2 or 3 months or maybe even 6 months. What they do is save up a little more money before they start the business. Maybe they have a significant other who will support them. I've seen one of our MBA groups where 3 guys started a business together and 2 of them kept their full-time jobs while the third one quit his job to start the business, and the other 2 supported him during the early months. So, you know, there are all kinds of clever ways that entrepreneurs think about this salary situation. We had one MBA student who went 3 years without a salary, and then you have to wonder if that's a viable business. She had an unusual situation with a kind of golden handshake from an airline she had worked for quite a while, and she was able to live on that while she really built the business. And once she got to a point where she started taking a salary, she took a nice one, but it allowed her the freedom to build that business, not take outside investors or loans or anything. And so that worked for her, but that's not the norm. But I'll bet our entrepreneur could figure out a way to go at least 1 more month without a salary. What do you think?
Okay, let's do it.
Put 0 in month 2.
All right, then what I need to do then is I need to, after doing that, I need to go down to the cash flow statement to make sure that it is matched with the income statement, and H23, there it is. Yes, it is.
Okay, so let's pull the net profit into view. All right, and let's pull the cash flow into view. And let's hit calculate.
Calculate.
Whoa. Our maximum deficit is in month number 5. It's $3,832.
I like it. It worked.
And we add that to the 8,000 the entrepreneur put in. Now we're down to $11,832. This is looking like it might be within our reach, but I bet we're not through yet.
What else can we do, Pat?
There was that big old insurance number. The entrepreneur decided
to
pay
yes.
insurance a year in advance.
That's right, right here. So what we did was we paid insurance up front. You know what? I think we probably don't have to do that, but if we pay insurance on a extended credit basis, we probably will be charged some sort of fee, right, Pat? So are you sure it's worth it to pay it to not pay up front and pay, but you have to incur an additional fee?
Well, that's the magic of Excel, Simon. We can do all this scheming and try it out and see how it works. So let's look at what would happen if we go up to insurance in the income statement.
Okay.
We'll see that we were using it up at a rate of $160 a month, but now the insurance company is going to charge us 1.1 times that. So
oh, they're going to charge us a 10% fee to pay monthly. And so the question is it worth it?
Quarterly.
Oh, quarterly. Sorry. 10% to pay quarterly. The question is it worth it?
Okay, so we're going to put in our formula of $1,920 times 1.1 divided by 12.
Okay, so that, so it did go up 10%. So that's why it's at 176.
Okay, so now down in the cash flow statement under insurance, we're going to pay quarterly. So we're going to just point to month 1 on the income statement, plus month 2, plus month 3, and enter. All right. And now we're going to go over to month 4 and do the same thing.
Okay.
Month 4 plus month 5 plus month 6.
I don't have a good feeling about this, Pat. I think it's not going to be worth it,
Well, let's pull that net profit into view.
All right. I mean, 10% fee. That's really okay. But you know what? Let's just test it and see what happens.
Yep, let's pull that cash flow into view and let's hit calculate.
Calculate.
All right.
Whoa! It
So,
actually helped us, Pat. That I did not think it would do that.
so our maximum deficit is now $29.61 in month number 5. And we add that to the $8,000 our entrepreneur put in. Now we're down to $10,961 plus a cushion to start this business.
Wow.
Our entrepreneur can come up with that. What do you think?
Absolutely. We can, if you're going to call yourself an entrepreneur, you can find another $2,961 from someplace else.
That's right. You can scheme, you can beg, borrow, and not steal, but come close to it to get those costs down. And the name of the game is to slow down the whoosh of cash going out and speed up the cash coming in without angering your suppliers or your customers. And it's a fine art, and successful entrepreneurs learn to walk that line very carefully and very skillfully, and it pays off just like it did right here in our inner city example. So I know that all our clever entrepreneurs out there in the class can come up with better ideas and more ideas, because each business is going to be unique and each one is going to have its own peculiarities as to where you might be able to change the way you do business a little bit so that you maximize that cash flow. And cash is king when you're starting a business, and there's no doubt about that. And I think we've shown that right here.